Okay, let's dig into this. You know the saying, in any gold rush, sell shovels.
Right.
Well, in this AI gold rush, the shovels look a lot like liquid-cooled server racks. And super microcomputer, SMCI, they're shipping them out. Big time.
They really are.
But here's the thing. For you, the investor, is just selling the tools, is that enough? Enough to actually, generate real returns here? Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks.
And today, we're plugging right into supermicrocomputer, tickers SMCI, and we're using data captured, September 15, 2025 at 6:14 a.m. Eastern Time from our research.
Okay, so set the scene for us. What's the overall market feeling like right now?
The mood, it's kind of like watchful waiting, I'd say.
Watchful waiting, yeah, sounds about right.
It's a pretty mild Monday. Pre-market futures are a bit mixed. You got the Dow and S&P slightly green, but the NASDAQ, the tech side, is lagging a bit.
And globally?
Globally, there's some caution too. UK growth stalled, which adds to this feeling that the global economy is, on a bit of a tightrope, needs careful handling.
Okay, so a cautious backdrop. Now let's zoom in on SMCI itself, because the story there seems less cautious.
Oh, definitely less cautious. Fundamentally, things are pretty explosive, actually. We've got some bombshell news.
Bombshell, okay.
Yeah, SMCI has started volume shipments, actual volume shipments of their new systems built around NVIDIA's Blackwell chips.
Wow, okay, so this isn't just talk, this is hardware moving.
Exactly. Product moving out the door. It puts them right at the absolute forefront of this whole AI infrastructure build-out.
And wasn't there something about Nokia, too?
That's right, yeah. A new partnership with Nokia. They're going to deliver turnkey AI data centers together.
Yeah, that sounds pretty significant.
Yeah.
So fundamentals look strong. What about valuation? Where does our research put it?
Our research suggests a fair value around $48.58. The stock's currently trading around $45, so there's a bit of a premium suggested by our numbers.
Right, a small premium. But hang on, you mentioned Wall Street earlier. How are they seeing this? Because it sounds like a slam dunk.
Well, that's where it gets interesting. Wall Street consensus is actually just a hold, and even more, sell ratings have been ticking up.
Hold on. Sell ratings are increasing with this kind of news. Why?
It's a huge disconnect, isn't it? You've got this red-hot company narrative shipping the latest tech, and then this sort of cool-headed, maybe even skeptical analyst community.
So what's the thinking there? Valuation, maybe?
Mm-hmm.
Or worried about competition down the line?
It's likely a mix of things. Analysts are probably weighing the, incredible growth against how fast the stock has already run up, maybe potential margin pressure as competitors jump in. It's volatile, this sector.
So they might be seeing froth, perhaps?
Could be. They might just be anticipating things leveling off a bit after such a huge surge. It's a real tension.
And this tension, it really shows up in the sentiment data, doesn't it? It's like two different worlds.
Absolutely. You look at the options market, it's a full-blown bull party.
A party? How so?
The put-to-call ratio is incredibly low, 0.18. That means, for every one bearish bet, every put option, there are more than 5 bullish call options. People are betting heavily on upside.
Okay, 5-to-1 bullish in options.
But then you look at the shares sold short, it's massive, 21% of the float.
21%, that's huge. A huge group of bears betting hard against it.
Exactly. So you've got this fascinatingly tense situation. Options bulls versus equity bears. It feels like a powder keg, really.
A powder keg is a good way to put it. So does the chart, the technicals, give us any clue which way this might break?
Well, let's look. The long-term picture, still technically positive. The 50-day moving average is clearly above the 200-day. That underlying trend is up.
Okay, foundationally strong, but short-term.
Short-term, it's more of a sideways grind, a consolidation, almost like the bull market's just taking a nap. Neither side is really taking control recently.
Any signs of life in that grind?
Actually, yes. Key momentum indicators, they've just flipped positive. So that suggests some strengthening upward momentum might be building under the surface.
Okay, momentum turning up and volatility.
That's the other interesting piece. The price swings, the volatility, it's getting tighter and tighter. It looks like it's coiling like a spring.
Which often happens before a bigger move.
Often, yeah. It signals building pressure.
Yeah.
So you've got this coiled spring, momentum just turning positive against that backdrop of bulls versus bears.
Wow. Okay, so summing this all up, we've got the cautious macro view, analysts saying hold, but then this huge fundamental news, bullish options, massive short interest, and a chart that's coiling. What's our overall take? What's the strategic outlook for SMCI?
Taking all that into account, our verdict for supermicrocomputer is a cautiously bullish outlook.
Cautiously bullish. Explain the cautious part first. What are the big risks we need to watch?
The caution comes mainly from, well, three things. One, that extremely high short interest, that's a real battle. Two, some conflicting signals we're seeing in our volume indicators within the research. And three, just that persistent hold rating from the broader analyst community. Can't ignore it.
Okay, those are definitely points of caution. But the bullish side, why lean that way despite the risks?
Because the bullish case based on our research is just really compelling. You have that game-changing fundamental catalyst, the Blackwell shipments actually happening. That's huge.
Right, tangible progress.
Exactly, and that's supported by the momentum just turning positive, that incredibly bullish options market, and the fact the stock is still trading below our estimated fair value. It's a strong setup for potential upside.
So if you're watching this play out, what are the key levels? Where are the battle lines drawn for the next few sessions?
Okay, the battle lines look like this. For the bulls, they really need to push price above $47 and hold it. If they can do that, the next target is likely that fair value estimate around $48.50.
And for the bears?
The bears will be defending that $47 level fiercely. Their goal will be to push it back down towards support, which sits around $44.60.
And what breaks the bullish idea? What's the invalidation point?
The key invalidation for our cautiously bullish view would be a decisive break below $44. If it drops convincingly below that, the picture changes.
Got it. So it really is a fascinating situation. While the bears are betting big against it, Supermicro is literally shipping the hardware that powers the future. Sometimes, maybe you just have to bet on the guy selling the shovels.
It's definitely a core part of the AI build-out story right now.
That's all for this deep dive. Remember, this podcast is for information purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.